Welcome back to Inside Out. As promised, let's get straight to our Swotlight segment. Well, the company on our radar is DCM Shriram Industries. And the question is it fully valued or is there scope for value unlocking from here on? Let's tell you a little bit about the business first up. Well, the company houses a sugar and distillery vertical which manufactures high purity, double refined sugar and also has modern facilities to produce country liquor and IMFL on demand on contract manufacturing basis. Well, they also have a chemicals vertical which is involved in producing high value, high technology drug intermediates. And the third vertical appears to be the most exciting and it's also the fastest growing vertical. That's the one that's focused on industrial fibers and engineering products, which also is related to defense production. Well, the financials appear to be pretty average in the last few years. High single-digit revenue growth and margins, well, have been in mid-single digits, while the debt appears to be around 300 crores. That's majorly working capital in its sugar business. Hence, on a trailing basis, well, it appears to be fairly valued, trading at around 22 times on a trailing basis its net profit and an EV upon EBITDA at around 11 times EV upon EBITDA. But after diving a little bit into the financials, we understand that sugar contributes the highest on the revenues front, but at the lowest in terms of margins. While the industrial fibers business, it contributes close to around 20% to the entire revenue scheme of things, but the highest in terms of EBITDA margins and also the highest in terms of EBITDA contribution. Well, the chemicals business, it contributes close to around 20% and it's around double-digit margins. Well, the management in August 2023, they announced restructuring of its businesses. They said that there'll be 3 listed entities which will be divided into DCM Shriram, which will house the sugar as well as ethanol and power businesses. The other 2 businesses will include DCM Shriram Fine Chemicals as well as DCM Shriram International. That will house the rayon business, which includes defense as well as the engineering projects. Now, the rationale that's been given by them is they want to provide scope for independent growth. They want to unlock some shareholder value because they're looking at better price discovery of each and every business. They also say that this facilitates succession planning in an orderly and a strategic manner as well. The big question is, will the street give a higher value to the demerged entities as its industrial fibers and related products division has been growing at a very fast clip and operating leverage as well could play out? If you look at the EBIT in the first half of this fiscal, well, it's more than the EBIT that they achieved in the entire of last fiscal. Additionally, what needs to be seen, how big can the defense vertical become as they are forayed into defense manufacturing under the Make in India theme. And they plan to set up a fully integrated facility to produce equipment for defense as well as homeland security organizations. Well, let's wind this down with a shareholding pattern then. Promoter entity, well, they hold roughly around 50% stake, while 9% is held by institutions which include LIC as well as Abacus Emerging Opportunities Fund. Well, we've completely run out of time on this episode of Inside Out. It's goodbye from Sonal and myself. But you keep writing to us, tell us about companies you want us to discuss. We'll do some research and try to feature some of them on the show. Thanks a lot for watching.